Hello and welcome to our news video. Subscribe to our channel and share your comments so that you don't miss any important news. Bitcoin ETPs now represent over 7% of BTC's market cap as institutional demand surges. Ethereum faces record-high short positions as bearish bets surge 500% since November. Shiba Inu, SHIB, burn rate soars 807% in 24 hours amid signs of market reversal. Strategy resumes Bitcoin accumulation with $742 million purchase following rebrand. KuCoin expands rapidly, reaching 38 million users amid LATAM and MENA growth. Bitcoin ETPs now represent over 7% of BTC's market cap as institutional demand surges. Institutional interest in Bitcoin exchange-traded products, ETPs, continues to rise, with investment inflows sustaining a 5-week streak of growth. Despite recent market corrections, the total assets under management, AUM, in crypto ETPs remain at $163 billion, according to a report by CoinShares. Bitcoin and Ethereum lead institutional inflows. Digital asset investment products recorded $1.3 billion in inflows last week, bringing the total for the year to $7.3 billion. Bitcoin, BTC, led the inflows, attracting $407 million, with ETPs now holding approximately 7.1% of BTC's total circulating supply. Ethereum, ETH, saw even greater investor interest, securing $793 million in inflows. This surge coincided with Ethereum's price dip to $2,100, prompting significant buying on weakness, noted James Butterfill, head of research at CoinShares. Global crypto investment trends. Institutional investment in digital assets is no longer confined to the US, as inflows were distributed across multiple regions. United States, $1 billion. Germany, $61 million. Switzerland, $54 million. Canada, $37 million. Among alternative assets, XRP and Solana, SOL, attracted $21 million and $11 million, respectively. Meanwhile, blockchain-related equities saw $33 million in inflows, bringing year-to-date investments in the sector to $194 million. Crypto ETP AUM drops despite strong inflows. Despite the steady influx of institutional funds, total AUM in crypto ETPs declined to $163 billion, down from its January peak of $181 billion. Analysts attribute this drop to recent price volatility in the broader cryptocurrency market. However, weekly trading volumes in crypto ETPs remain stable at $20 billion, indicating consistent investor activity despite market fluctuations. What's next for Bitcoin and Ethereum ETPs? With institutional demand at an all-time high, analysts predict that Bitcoin and Ethereum ETFs will continue to play a significant role in shaping market sentiment. Bitcoin ETPs now account for over 7% of BTC's market cap, reinforcing its status as a long-term institutional asset. Meanwhile, Ethereum's record-breaking inflows suggest increasing confidence in its future, particularly as anticipation builds for upcoming upgrades like Pectra. As global crypto adoption expands, institutional investment in digital asset funds is expected to drive market momentum in the months ahead. Ethereum faces record-high short positions as bearish bets surge 500% since November. Ethereum, ETH, is experiencing an unprecedented surge in short interest, with bearish bets against the cryptocurrency skyrocketing 500% since November 2024. Analysts are now debating whether a potential short squeeze could trigger a price rebound and help Ethereum close the performance gap with Bitcoin, BTC. According to the Kobayashi letter, a leading global capital markets commentary, Ethereum's short interest surged 40% last week alone, adding to its five-fold increase over the past 3 months. Regulatory clarity under Trump fails to boost Ethereum. For years, uncertainty around Ethereum's legal classification has fueled concerns that the U.S. Securities and Exchange Commission, SEC, might label it a security. However, with the Trump administration adopting a more crypto-friendly stance, many analysts now believe such a classification is unlikely. This shift in regulatory sentiment was further reinforced when Eric Trump recently posted on X, formerly Twitter, that it's a great time to add ETH. His comment briefly boosted Ethereum's price, though the rally was short-lived as bearish sentiment continued to dominate the market. Despite the improved regulatory outlook, Ethereum is now facing its highest level of short positioning in history. Market volatility and institutional buying. Analysts at the Kobayashi letter highlight several volatile trading periods that have intensified short activity. February 2, 2025, Ethereum plunged 37% in just 60 hours following trade war concerns. December 2024, despite $2 billion in institutional inflows, hedge funds aggressively increased short positions on ETH. January 21, 2025, Inauguration Day, Ethereum's trading volume spiked, coinciding with market uncertainty surrounding President Donald Trump's policies. February 3, 2025 crash. Despite high inflows, Ethereum struggled to recover and remains 45% below its all-time high, ATH, set in November 2021. Could a short squeeze trigger an ETH rebound? With such high levels of short positioning, analysts warn that Ethereum could be vulnerable to a short squeeze, a situation where traders betting against ETH are forced to buy back their positions, leading to rapid price increases. Historically, short squeezes have led to major rallies in crypto markets. If a strong enough catalyst emerges, such as a positive Pectra upgrade announcement or a surge in ETF inflows, Ethereum could experience a sharp rebound. Ethereum's price outlook. Despite short-term price struggles, Ethereum remains a key player in institutional investment portfolios. In the past 3 weeks alone, ETH has attracted over $2 billion in new capital, including a record-breaking weekly inflow of $854 million. With Ethereum ETFs gaining traction and long-term investors accumulating ETH, market observers believe Ethereum's recent bearish phase may not last indefinitely. As regulatory clarity improves and potential catalysts emerge, Ethereum could still reclaim lost ground, especially if a short squeeze forces bearish traders to unwind their positions. Shiba Inu, SHIB, burn rate soars 807% in 24 hours amid signs of market reversal. The Shiba Inu, SHIB, burn rate has surged 807% in the past 24 hours, with more than 20.5 million SHIB tokens permanently removed from circulation. This increase has fueled speculation about a potential price reversal for the popular meme coin. According to Shiba, a blockchain tracking service, the latest spike in SHIB burns marks a significant increase compared to previous days. Major transactions drive burn surge. The sudden rise in SHIB's burn rate was largely driven by two high-value transactions. 13.5 million SHIB was sent to a burn wallet in a single transaction. 6.3 million SHIB was burned shortly after. Despite this daily increase, the weekly burn rate tells a different story. Over the past 7 days, SHIB burns have actually dropped by 94.6% compared to previous weeks. However, 62.7 million SHIB tokens were still burned during this period, far exceeding previous daily averages. Why are SHIB tokens being burned? The Shiba Inu burn mechanism aims to gradually reduce the circulating supply of SHIB, increasing scarcity over time. The idea is that fewer tokens in circulation could eventually push prices higher. Since SHIB's burning initiative began, over 410 trillion tokens have been permanently removed from the supply. This effort was significantly accelerated when Ethereum co-founder Vitalik Buterin famously burned a large portion of SHIB tokens that were gifted to him. However, despite these burns, over 584 trillion SHIB are still in circulation, meaning the community has a long way to go before achieving meaningful scarcity. Traders spot signs of a potential SHIB reversal. The recent burn activity has reignited optimism in the SHIB community. Prominent crypto trader $SHIB Knight shared a weekly SHIB price chart with his 467,000 followers, pointing out key technical signals. The market has printed its first green candle after 5 consecutive red weeks. The recent dip appears to be losing momentum, signaling a potential trend shift. The dip is behind us, the trader noted, suggesting that SHIB could be on the verge of a bullish reversal. SHIB price outlook: will the burn rate impact its value? While burning tokens helps reduce supply, its direct impact on SHIB's price remains uncertain. Historically, SHIB burn events have led to short-term price spikes but have struggled to create long-term upward momentum. However, with market sentiment improving and traders eyeing potential rebounds, the 807% surge in burn rate could contribute to renewed investor confidence in SHIB. As the broader crypto market stabilizes, all eyes are now on whether SHIB can capitalize on this momentum and break out of its recent consolidation phase. Strategy resumes Bitcoin accumulation with $742 million purchase following rebrand. Strategy, formerly known as MicroStrategy, has executed its first Bitcoin (BTC) purchase since its corporate rebrand, acquiring 7,633 BTC for approximately $742.4 million. According to a filing with the U.S. Securities and Exchange Commission, SEC, the purchase was funded through additional share offerings via Strategy's At the Market (ATM) stock program. Strategy's Bitcoin holdings continue to grow. With this latest acquisition, Strategy now holds 478,740 BTC, currently valued at over $46 billion. Since 2020, the company has allocated $31.1 billion toward its BTC strategy, making it the largest corporate Bitcoin holder in the world. First Bitcoin purchase since rebranding to Strategy. This Bitcoin purchase is the first since the company officially dropped Micro from its name, reinforcing its shift toward a Bitcoin-focused identity. The company also introduced a Bitcoin-themed orange logo, symbolizing its long-term vision, dubbed the 21-21st strategy. This plan aims to accumulate $42 billion worth of BTC by late 2027. Q for losses did not deter shareholder confidence. Despite reporting a $670 million impairment loss on its Bitcoin holdings in Q for 2024, Strategy remains committed to expanding its BTC reserves. Shareholders recently approved a 30-fold increase in shares available through the company's ATM stock program, signaling continued investor confidence in its Bitcoin-first strategy. What's next for Strategy's Bitcoin acquisition plan? Under the leadership of Michael Saylor, Strategy has positioned itself as a leading institutional Bitcoin advocate. The company's aggressive accumulation strategy suggests that further BTC acquisitions may be on the horizon, reinforcing Bitcoin's role as a long-term treasury asset. With institutional interest in Bitcoin growing and spot ETFs driving increased market adoption, analysts predict Strategy will remain a key player in the evolving crypto investment landscape. KuCoin expands rapidly, reaching 38 million users amid LATAM and MENA growth. Crypto exchange KuCoin has achieved a significant milestone, growing its user base to 38 million in 2024, with record adoption in Latin America, LATAM, and the Middle East and North Africa, MENA, regions. According to a press release shared with Crypto.news, KuCoin attributes its rapid expansion to increasing interest in spot and futures trading in these regions. KuCoin sees explosive growth in emerging markets. Trading volume in MENA tripled compared to 2023. European markets saw a 144% increase in trading activity. KuCoin listed 300 new tokens in 2024, with over 30% added in the last quarter alone. Futures trading surged, with the platform introducing 125 new assets and attracting 3 million new traders. KuCoin teases AI upgrades but remains silent on US market exit. Looking ahead to 2025, KuCoin has announced plans to roll out AI-driven solutions and user-focused upgrades, though it has not provided specifics. Notably, the exchange has avoided discussing its $297 million fine after pleading guilty in a U.S. court for failing to comply with anti-money laundering (AML) regulations. As previously reported, KuCoin admitted to operating an unlicensed money transmission business and violating U.S. anti-money laundering and Know Your Customer (KYC) rules. As part of the settlement, the company is required to exit the U.S. market for at least 2 years. KuCoin's market position and future outlook. Despite regulatory challenges, KuCoin remains a dominant force in the crypto exchange landscape. According to CoinMarketCap, KuCoin now ranks 8th in daily trading volume, surpassing $1 billion, placing it just behind US-based Kraken. With its focus on emerging markets and continued expansion in LATAM and MENA, KuCoin is well positioned to further solidify its global presence in 2025.